Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be taking a brief look at my M1 finance portfolio that is focused on a little bit more of growth type stocks that definitely have some more risk involved than a lot of the solid blue chip dividend companies that I invest in, or index funds that I invest in with a lot of my other investments. So this is definitely a little bit more risky part of investing for me, and so as a result I don't allocate quite as much money to it. At this point, I'm only putting in about $15 a week. So you can see here my portfolio right now is around $580. I've had this for a little bit over a year, just been contributing consistently over time. And so it says I've contributed $771, but some of that is from referrals and stuff like that. So I haven't put that much money in to the account. And this is with M1 Finance, which they have this pie feature. So basically, you can allocate specific holdings to a specific percentage, and then whenever you deposit cash, they would just buy those holdings in that specific percentage. So for example, I want the Vanguard Information Technology ETF VGT to be 17% of this portfolio. So I set it to 17%, and then every time I deposit money, it invests about 17% of that deposit into VGT. So it's just a super passive way to invest, and I really enjoy the platform, and there's really not much I have to do aside from set up the automatic bank transfer every week and stuff like that. So there is a referral program if you're interested. If you sign up using my link, you'll get $50 once you deposit the required minimum, which is in most of the cases only $100 for a regular account. And if you open a Roth IRA, that minimum is $500. So it's a pretty good way just to get a little bit of extra cash to invest. And so far, I've gotten a few referrals, and I really appreciate that. But if you haven't signed up and you want to, definitely use my link. For now, this referral for the $50 only goes to the end of March 31st, so about a month left now. But usually they have some other referral for maybe $10 or $30 or something like that. But usually it's not as high as $50. So definitely take advantage of that if you want to. So looking a little bit more closely at my holdings, obviously, Vanguard VGT Information Technology ETF is the biggest at 17%. And this one has performed pretty well for me compared to a lot of the other companies. So it's almost about $100 worth of value right now, and just about breaking even. Then Amazon, about 9% of the portfolio. And one thing I do want to mention with the percentage returns, it's a little bit, they use the money weighted return of your investments instead of the time weighted, I believe. Maybe I have that backwards. I honestly always get those numbers confused. Yeah, so this is the money weighted return, which it's a little bit weird how they calculate it. But for me, I don't really pay attention to the actual numbers because they don't really make the most sense, which we'll take a look at an example to see exactly what I mean. But Amazon, down a little bit on this position. ARK K, this is about 9% of the portfolio as well. Down fairly substantially on this position, but it's not that big a portion of the portfolio. And over time, I'll probably reduce my allocation slowly over time once they recover some. But for now, I'm just going to leave it there. Google is about 9% of the portfolio. They've been doing well for me, have granted me some gains. And they have announced a stock split, which is pretty interesting, 20-1. So the new stock price will probably be around $120 or so. I think it's set to go through sometime in July of this year. Maybe July 18th might be the exact date. I'm not positive on that one. Shopify is down pretty big for me. It's about 9% of the portfolio. I think they announced earnings recently, and they weren't quite as good as people expected. So it says it's down 83%, right? But let's kind of think about that. So the current stock price is $656, and my average price is $1,101. So if we think about that, then if my if the current price was $600, and my average price was $1,200, then I'd be down 50% on that, right? But the average price is lower than that, and the current price is higher. So I'm really down less than 50%, from a strictly percentage perspective, I guess. So if we do 656 divided by 1101, so I'm down about 40% really. which is still pretty bad, but it's just 83% makes it sound, say, a lot worse, I guess. PayPal, in a similar situation with PayPal. I definitely haven't been watching Shopify as closely, but PayPal and another one we're going to talk about soon, these are companies that, from my perspective, they have a lot going for them, and they're just, seeing some tough times on the stock price, and it's really not warranted. Like PayPal, I would say it's definitely undervalued right now, and it's way beaten down past where I think it should be. Like the stock price is $100, and it was $200 recently, and I thought that was pretty low at that point. So overall, PayPal, one that I definitely not minding buying more of every single week. Tesla has been doing well for me, up about 25% by this estimation, I guess, but up a little bit at least is what really matters. And that's about 7% of the portfolio. The next one here is Jumia. This one's about 6% of the portfolio now. And the reason for that is, along with Shopify, I actually made a manual buy just on Friday. So I bought about $5 of Jumia and about $10 of Shopify, just because I was down pretty hard on my positions and I thought it would be a good time to average down. So right now I'm down probably about 50% on my Jumia position, because my average price is around $16. The current share price is around $8, but I think they'll be fine in a few years. And we've started to see that they have been, increasing their margins, and that plan for them has been working over the last few quarters, I think. So, their general plan was to focus more on margins than total revenues. So their revenues kind of fell and were kind of stagnant over the last year or two, but their margins have started to increase, which is good, as they're focusing more on selling products sort of within their space, rather than working with third-party sellers as much. So just an interesting thing going on there, and I think they'll continue to have problems for sure, but eventually do fine. And then Visa and Mastercard here, both fairly similar companies, both around 6% of the portfolio, and they both pay pretty small dividends. And Mastercard for me is up just a little bit more than Visa, but they're both just about breaking even and up a little bit. And then Square is about 5%. All of these last three are about 5%. Square, in a similar position from my perspective as PayPal, in that they've just been down a ton. Like if you look at a stock price chart for Square over the last year or so, it's absolutely atrocious. Like they were at almost $300 just this summer, and now they're down at $100. So it's pretty interesting to look at those kinds of things, I guess. And then if we go back, the next one here is Spotify. They're about 5% of the portfolio. Been having some problems recently. There was some controversies with some stuff around Joe Rogan, and that caused the stock price to go down pretty heavily over the past month or two, I think. So, not a big deal in the long term, and I think that Spotify will move past that controversy, and again, in the long term, I don't think that's going to really affect them that much. And then the last one here, Adobe, just a solid company overall, but obviously, like a lot of tech companies, been seeing some hardships, I guess, in their stock price recently. So, overall, the portfolio is down a fair bit. This obviously says 45% down, but that's not really realistic at all when we think about it from a strictly percentage perspective. But, if we look at the portfolio over the last quarter, it's down a little bit, but mostly it's pretty much just stagnant, which obviously I've still been adding money to the portfolio. So we would expect it to be going up if I'm adding money. But, overall, it's just kind of trading sideways, a little bit down, but I'm really not too worried about it. I think in the long term, a lot of these companies will do great. And that's kind of what my perspective is at this point. Like I said, I'm hoping to, over time, I think decrease my ARK-K position, but I definitely want it to let it recover some, which I think it definitely will over the next few months. Maybe I'll have to wait a year or two, but there's also some problems because of problems in the market, at least because of what's going on in Russia and Ukraine and kind of the uncertainty there. So uncertainty can cause lots of problems in the stock market, and there's a lot of uncertainty surrounding that political situation. Just a lot of people don't know what's going to happen, so that causes lots of volatility and oftentimes red in the stock market. But overall, these growth stocks, I think the vast majority of them are pretty solid. As far as growth stocks go, at least, there's no like crazy penny stocks or super speculative things. I think Jumia is probably the most speculative thing I have in there, and I'm really not too worried about that one either. So definitely would like to hear any perspective you guys have on the portfolio or any stocks in particular in the comments below, and want to thank everyone for sticking around to the end of the video. I will see you in the next one.